Hey, welcome to our teaching. My name's Pete Benson with Beacon Capital Management. Today, a very important topic, the topic of Social Security and how you can maximize your Social Security income for you and your family. So this is part one of several, but today we're just going to kind of talk about the basics and get you into having more information to really understand that this is not an easy subject and you really want to go to school, and hopefully this is part of that. So the people that can take Social Security, the ages is as early as age 62 and all the way up to age 70. So anywhere in between there is really a time that you can pick to maximize your Social Security. And how you pick that is really determined by, are you still working? What are your needs? Do you need this income now, or can you let it build a little bit longer? So there's a lot that goes into the magic age for you and your family. Also, they calculate the 35 highest earning years for you to determine what your amount would be at age 62, and then full Social Security and all the way up to age 70. So remember, it's the 35 highest earning years for you. And then you got to understand where Social Security fits into your overall financial and retirement plan. We believe that income is the foundation of your financial house. That is so critical. That's the foundation that everything is built on, is income. And Social Security, if you can picture it, is the cornerstone of that income. So again, a very important part of what we think is the most important part of a successful retirement. So certainly not something to be taken blindly or casually, but with a lot of thought and with a lot of preparation. Now, there's a lot of rules, speaking of a lot, many rules that guide and determine Social Security and the amount that you're going to get and all that's associated with it. Over 2,700 rules to be exact. So I'm sure nobody has them memorized, but they all matter. So this is another reason why viewing this video and getting some education before you make this all-important decision is so important. Now, it's complicated, and there's a domino effect also, because when and how you take your Social Security really affects so many other things, like your Medicare premiums, other taxes, and so many other things to do with your retirement income. So again, just another reason why it's so important that you get the education first, because there's no do-overs here. When you pick to take your Social Security, you get one shot at it, and that's it. And again, one of the biggest things that people want to try to avoid is triggering other taxes that are associated with their income in retirement. And again, those Medicare premiums. So understand that one decision can affect another, which affects another, and so therefore there's a lot of pieces to put in place here. So what you don't want is higher taxes. Now, everybody in retirement is not paying the same amount of taxes concerning their Social Security, and not everyone has the same amount taxed. Now, I think if we were to pick, most people would pick that we want to pay the lowest amount in taxes, and we want the lowest amount of our Social Security to be taxed again. And there are people in retirement that pay no taxes on their Social Security. So if they're getting $2,000 a month, they're keeping all of it. I like how that sounds, and I bet you do too. But some people are paying taxes on 50% of their benefit. So if they're getting $40,000 a year, that means $20,000 of that dollars is taxed at their income rate. And some people are paying as much as 85% of their Social Security is taxed. So again, almost all of it, if it's 85%. So if you're getting, as a family, $25,000, $35,000, or even over $50,000 of benefit, whether that is taxed at zero or whether 50% of it's taxed or 85% of it's taxed, really determines how much money you actually get to spend of your Social Security. So planning for this is one of the most critical things that you need to do before you make this decision about Social Security. You need to know all the benefits and how that taxation takes place. You see, there's certain income instruments that you can get in retirement that don't affect taxes on your Social Security at all. And there's other things that you would think don't affect it that do. And so you need to know the rules about, well, what is actually considered in determining how much of my Social Security is taxed. And again, go back to this point. It's very complicated. So the importance of getting the education up front, because again, we have one shot at this, is so important. They take your gross income, but there's so many different factors that are joined in on that really affect whether it's municipal bonds that you might have, a Roth IRA, a regular IRA, another pension, is it dividends from a brokerage account, maybe interest off of a CD or an annuity. Like, some of those things really negatively affect the taxation of your Social Security, and other things are inconsequential. So knowing what those things are so that you can get all the pieces in place before you make this decision, so important. Now, it's important also to know that if you are married and you have $32,000 of income, married filing jointly, if you have less than $32,000, you won't be taxed. But if you have more than $32,000, then some of your Social Security will be taxed. If you are not married, you're single, it's $25,000. So again, what you see here is they don't really allow you to have a whole lot of income before your Social Security is taxed. So I would say the vast majority of people end up with being taxed on either 50% or 85% of their Social Security. And over a 20-year period of retirement, that's a lot of money that's going to Uncle Sam instead of your enjoyment in retirement. So planning for this is so critically important. And there's a lot that goes into it. So what I recommend is that you go to your planning professional, the person that you trust, and get all the questions answered and get all the information that you can, because again, one shot at it. So you can't really start too early. You need to gather the information, start putting the pieces in place. And again, everything in retirement kind of builds on each other. So make sure that you have a well thought out retirement plan so that you can maximize your Social Security income. Now, hopefully this has been helpful, and there's going to be more follow-on teachings on the subject of Social Security that we're going to make available to you. So again, we hope this has been helpful, and we'll see you next time.